Okay, perfect. Hello, everyone. My name is Devin Mata. I'm the CEO and co-founder, Rican, and it's my pleasure today to have two great invites. Obviously, one is the General Counsel of Rican, Elisenda Fábrica, but also a great member from PricewaterhouseCoopers, and he was going to be discussing how MiCA regulation cryptocurrencies are in Europe, but also abroad. Michael. And with that, let me brief well, I'll let both of our guest members here to introduce themselves. There's nobody can introduce better than themselves, right? So, Michael, an absolute pleasure to have you here, and thank you very much for the invite, for accepting the invite.
Well, thank you very much. And at risk of now already speaking, and I will then quickly introduce myself, but then hand over to Ellie to introduce herself. My name is Michael Huertas. I'm the Global Head of Financial Services Legal for PwC Legal, and look after traditional financial services firms, digital asset native firms, and anyone in between, navigating between those two pillars of financial services and capital markets. By way of background, I'm a American and Austrian citizen, but I'm a English lawyer, an Irish lawyer, and a German lawyer, and I'm currently tuned in from Dubai, normally based in Germany, but currently in Dubai. And we're going to talk about some of the differences that are currently emerging between the EU, the UK, and also the Middle East, and possibly also the US. But I'll stop there. Maybe Ellie, if you want to say a couple of words.
Hi everyone. Hi Michael and Edwin. Well, my name is Elisenda, as Edwin already told you. I'm the general counsel inside Bricken. This means that I'm a lawyer, but I work inside the company, giving advice to the departments of the company, our clients, etc. Okay, my day-to-day is drafting contracts, reviewing contracts, also analyzing the regulatory implications to our company. Thank you.
Perfect. No, go ahead, Michael. I thought that you were going to say something. Maybe we can start with your presentation, of course.
Perfect. Yeah, sorry about that. It was a bit too quick on the mute button. But yeah, if we can just blend in the presentation. I promise I won't do death by PowerPoint, but I think it's important to bring some of the key themes and developments on screen. So what I wanted to talk about today specifically was MiCAR, so that's the Markets and Crypto Assets Regulation, and where we currently stand ahead of the full operationalization of that regime by December 30th, 2024. So a pretty important date as we turn the page on full operationalization of this newest addition to the European Union's single rulebook. Then talk about token classification, some of the more practical impacts on AML and financial crime prevention, and the interplay and sometimes the lack of interplay with MiCAR. Then briefly touch upon jurisdictional equivalence, or as one of my clients has put it, every single region or jurisdiction is kind of looking at crypto in their own way and building their own walled garden. At some point, we need to get from one walled garden to another walled garden because crypto is global. And then the rest is just for further information. And I appreciate these slides will be shared for those that are of interest. And indeed, there's a host of further material that's available. So where are we with MiCAR? MiCAR has been a long time coming, but it is obviously in a European Union context, a regulation. So it's directly applicable in all the EU 27 member states. Part of MiCAR was already introduced on the 30th of June of this year, and that was specifically aimed at stablecoins, or what MiCAR calls asset reference tokens and e-money tokens. But the rest of the MiCAR regime, and more importantly, distinguishing between which crypto assets will fall under just, in quotation marks, MiCAR, and which will fall under the rest of the financial services space, all of that regulatory framework is coming into full operationalization by 30th of December 2024. So in a couple of days. That being said, regulation is a journey. And of course, whilst the EU is very much confident that they've built this newest chapter to the framework that in the EU is called the single rulebook, And whilst MiCA replaces a patchwork of individual member states' national frameworks when it comes to the regulation of crypto assets, MiCA 1.0 is the start of that further journey, with further rulemaking already anticipated. And so one of the key things to note is that whilst 1st of January 2025, everyone will wake up in the very exciting new year with a lot of change across markets generally. There will be further regulation, there will be further rulemaking instruments, there will be further supervisory guidance across the EU, and indeed that question of how do we get comparability and interconnectedness with other markets. That's really the next stage of the development, and that's where there's a ton of opportunity for clients, market infrastructure providers, real world asset owners to really take full use of this framework. Very briefly, MiCA should be read in conjunction with a number of other EU legislative instruments. So specifically, the EU has been reforming its financial crime prevention set of rules, primarily through the AML regulation, which will replace the AML directive, which was introduced in various different formats and iterations across the 27 member states. And it will also see the introduction and full operationalization of the newest super regulator in the European Union, which is the AML authority, which will be based in Frankfurt. So there's quite a degree of change. AMLA, the AML authority, will also have direct oversight powers over selected, and when we mean selected, we mean large, systemically important crypto asset service providers, a number of those stablecoin providers. Some of those are already pretty aware or getting prepared for that. Others are just at the beginning of that journey. But there's quite a degree of change that's happening there. The other change, which is important to note, is more on the traditional financial services regulatory side of the fence. And that's in particular with the Listing Act package, which makes targeted amendments to the so-called prospectus regulation, as well as a number of technical amendments to the Markets and Financial Infrastructure Directive and Markets and Financial Infrastructure Regulation, so MiFIR and MiFID, which have each been supplemented by IFR and IFD. But those are sort of the cornerstones of capital markets legislation in the European Union. And there is an interplay with digital assets that fall under MiCA, and in particular, those digital assets that can be categorized at some point, either at launch or at a later point, or because of the activity where it moves from the MiCA only legislative and regulatory framework and supervisory framework back into that more established traditional financial services framework. So MiCA is comprehensive. It's not entirely 100% perfect. There are areas where, of course, further work needs to be done, but it is certainly very welcome that it's taken a relatively short period of time to come from that first policy proposal through to an actual full and functioning reality of a legislative and regulatory framework. Going forward, just to visualize some of what I just discussed, we divide the world of digital assets between those digital assets that will fall under the traditional financial services legislation and be classified as a financial instrument. So a security token, for example, would be a transferable security. However, a stable coin, either an asset reference token or e-money token, or a utility token will be regulated and supervised as a utility token under MiCA. And as I said, you can move from this side of the house very easily over to this side of the house. And conceptually, you can also, of course, in theory, have derivative products that fall from this side that could potentially go into there. So there's some aspects there to consider. And there's also another aspect to consider, that there is an interplay certainly between crypto assets falling under MiCA and their relationship to payment services legislation in Europe, where there's still a bit of work and clarification that's required to be done. Ideally, it was supposed to be done by the end of this calendar year. There may be a bit of an overlap going into the new year, into 2025. But for those of you that have been following daily updates from the European supervisory authorities, or indeed from from PwC Legal and other commentators on the market. As people move through to the festive season, those publications are picking up pace, and of course will need to be digested when people return then in January. So there is this important divide, and importantly also the ability to move between the two pillars of how digital assets are treated. The one thing that I think is important to call out is that MiCAR, whilst it regulates what happens and how and who can do what with whom and on what basis when it comes to crypto assets when they are issued, as well as following their issuance, so the activities that are regulated activities that fall within MiCAR or within the traditional financial services space, there's still a degree of things that are not covered by MiCAR. So particularly, let's call out the obvious, CBDCs are excluded from MiCAR. They're also not included within the traditional financial services regime. Non-fungible tokens, NFTs, are not always in MiCAR. They can be if they meet certain characteristics, but they're also excluded if they're not. And that depends on the degree of fungibility, and there's some further guidance that is being finalized around that. And more importantly, and this is the big one, is that DeFi and activity in that wide term of what exactly is DeFi is currently still up for debate as to whether it's to be included or not to be included. And that's quite important when you start to look at some of things when it comes to staking or atomic swaps, and how do you actually approach that from a regulatory perspective, and more importantly, if you are a firm or even investor or a user in that space, or you have a project and you're thinking about how to conceive what you would like to bolt on to your project, some of those questions still need resolution, and indeed they are scheduled for resolution as MiCAR goes through its evolution from now being fully operationally ready to further upgrades that are coming through, as well as that continuous flow of further implementing technical standards, regulatory technical standards, and supervisory guidance from the European supervisory authorities. The other thing as well, which I think is also important for those that are really thinking about the tokenization process as a whole, is that there is currently no real 100% focus on what a regulator and a supervisor would distinguish to be good tokenization. There's plenty which is out there to say what does bad look like, which is already a right step in the right direction possibly. But that real sort of standard of what does good look like is still something which is subject to consensus being formed on that. Very briefly now to look at some of what this means for that wider sense. I talked about AML and financial crime and being able to understand the interplay also with the travel rule, which again, for those of you that are familiar with the travel rule, basically sending information about recipient and sender of crypto assets. The travel rule in the EU has already existed for for fiat transfers, so under the wire transfer regulation. That was subsequently amended, and it's now been extended to include the FATF's travel rule, but with certain European specifics, in particular when it comes down to non-custodial wallets, so self-hosted wallets. And indeed, there is a bit of a degree of difference between the understanding and the implementation of the travel rule with other jurisdictions. So again, whilst every G20 jurisdiction and pretty much major jurisdictions in the world all agreed on the concept of the travel rule, there are still differences, which means that sometimes it may actually be difficult to get full travel rule compliance when you start to involve certain jurisdictions into the mix. Over time, the aspect, or at least the wider hope, is that you will have convergence on that front. Now, I've called out specifically Germany, not just because I'm usually based there, but I think the key point is that Germany was one of the first EU member states to really push crypto asset regulation, and did it rather elegantly by focusing on that principle. And when I say elegant, I mean elegant in its simplicity, perhaps not always elegant in the text that came out of it. But the simplicity was always on the basis of, if it walks like a security and looks like a security and operates like a security, regulated as a security. And that was quite easy, because you could say, okay, fine, I can treat it as such. I have all the legal, so commercial law concepts that can apply with some degree of legal agility or mental flexibility in how to apply concepts that would be applicable to traditional equity security, but making that work in practice, right? And indeed, Germany did the same with custody. Certain other jurisdictions had followed. Malta is a great example of actually having moved ahead in that space, and a couple of other national member states were good at doing that as well. NICAR builds upon some of that, and now, unfortunately, due to, as I think everyone has kind of seen in the press, some of the difficulties that have been plaguing domestic politics in the European Union, and particular in Germany as well as in France, some of that efficiency, of course, in Germany has broken down, so that the actual further implementation act, which is a specific of how certain EU regulations have to be supplemented under national domestic law, in this case German domestic law, are unable to get done within this current parliamentary term. So that means that a lot of things that work on the EU level and are on paper on the EU level are not necessarily translated into the full operational reality as it currently stands. And that causes at times a bit of delay. Now, luckily, we have regulators across the European Union that are fully aware that MiCA is here, people are ready to go, applications are ready to be submitted. Again, not every national competent authority has their applications done. There are differing transitional periods of implementation. So there is still that, yes, end goal of replacing the regulatory patchwork with a single rulebook or a new chapter to the single rulebook. But sometimes the supervisory reality is not as single as yet as it could be. And again, 2025 is that teething phase to get through to that. So moving on very briefly again, I talked about some of this, but this is again just sort of to visualize what falls in where. Specifically, I think what most project owners, but also crypto asset service providers are going to be looking at is to make sure that if you are outside of traditional financial services legislation, what do you need to put in place to ensure that you remain outside of it, right? What do you need to do to ensure that a utility token will continue to be treated as a utility token and not suddenly be recategorized as a security token, or otherwise become subject to payment services legislation, where if you don't have the right licenses or you're not using regulated and supervised counterparties and partners who have the right licenses, you could run into an issue, right? Same thing also when it comes to issuances. Do I need a white paper? Do I actually need a MiCAR white paper? Or do I need an actual prospectus, which falls under the prospectus regulation? So those are some of the aspects that I think are at the forefront of certainly clients that I speak to, and putting that framework around it operationally is going to be quite important over 2025. And that applies, of course, within the EU, but also in all the other jurisdictions around the world that have similar frameworks as well. The other thing that is quite important is that terminology is still not as consistent and clearly defined as it sometimes could be, right? So if you look at the debate that's happening currently around decentralized finance, DeFi, right? There's huge differences between what various different stakeholders are actually looking at as, what does decentralized even mean? Or simple things as, what actually will qualify as a currency, right? Thankfully, the ECB and the European Systemic Risk Board have been quite clear to call that out. Of course, the ECB has a vested interest in doing that and preserving the official tender concept of money, and that's why, of course, CBDCs have a great role to play. But there are also some other areas where that focus on terminology and conceptual differences between how terminology is used, including when it's translated into other official languages of the European Union. Sometimes the meaning in the original language of how it was conceived can, of course, shift. And of course, we see this time and time again. This is not specific just to digital assets. It applies to European legislation in every facet. And of course, the EU, united in our diversity, means that we have to respect the linguistic traditions as well, and the linguistic traditions with the legal traditions. And again, the European supervisory authorities are publishing further information on that, and we also, in PwC's Global Crypto Regulatory Report, which will be available shortly, have a couple of deep dives on some of that, and some focus on some of the false friends when it comes to some of the definitions and terminology. The other thing I wanted to pick up on was very briefly here, where we are in terms of some of the more operational practicalities. So just very briefly, as I said, not all member states are open for applications. Some have been moving ahead. Some have had it quite easy, of course, because Malta and Lithuania have historically been national member states that have always been fairly advanced in their licensing approach. Some, of course, have been better than others. And of course, if you will have seen in the Baltics, there have been some shifts as to the willingness to accept new applications. But things will be opening up over time. And then, of course, the aspect to consider is that, yes, there are common application forms, but there will still be some national differences as well. And that should also be taken into account once one looks at, where do I want to set up? What do I want to do? Do I adopt it on a multi jurisdiction basis, or do I just set up in terms of one jurisdiction? And that also works in terms of how one deals with partners and counterparties and so on. The other thing, of course, that is quite in focus is, and this is across financial services generally, and apologies if you've heard this before, but third-party operational resilience and third-party risk exposure. So in particular in the EU, we also have the Digital Operational Resilience Act, which comes into full force on 17th of January 2025. So a busy festive season ahead. DORA becomes applicable to crypto asset service providers. It will also be relevant for crypto asset issuers. So contracts that have a nexus to digital operational resilience need to meet DORA's expectations and DORA's obligations. That applies whether you are a digital asset native. It also applies, of course, to if you're a traditional financial services firm that is moving into that additional MiCAR activity through the somewhat easier grandfathering and sort of sideways move over in terms of application as opposed to a fresh application, if that makes sense. So an extension of application as opposed to a fresh application. The other thing I think I've also already touched on is the travel rule. Again, there will be a focus on that from the supervisors because it's frankly easy for them to police. It's much easier for them to look at travel rule compliance than to say, whether other aspects of MiCAR and other aspects of the new rules have been fully implemented, and there will be, I think, less tolerance for travel rule non-compliance than for other parts of the single rulebook, where there are still certain technical clarifications that are required. Now, moving on very briefly to jurisdictional equivalence, one of the key things that we've been watching, and of course our clients and other stakeholders that we deal with have been watching, is how various different regimes are looking either to emulate but also interface with MiCAR. And if you look at it from the view from Brussels and indeed certain national capitals in the EU, MiCAR is perceived as the gold standard. I'm not going to disagree with that, but I'm going to cautiously optimistically say that certain non-EU jurisdictions may have additional degree of flexibility than the EU might have. And what does that mean? It means that certain jurisdictions may be able to adopt a competitive approach by saying our rules are, or we will agree that the rules of the EU are equivalent to our rules in the UK or in other jurisdictions, and possibly look to retain some of that activity that would ordinarily, if you're looking to target the EU's single market of 600 million citizens and residents in the European Union, you would need to, under MiCAR, actually be physically present within the EU to be able to conduct MiCAR compliant business. So looking at, how does my regime compare to your regime is something which is the forefront of policymakers. And that means that firms, regardless of how they are regulated and regardless of what activity they do, need to be very flexible and agile to think about, where do I want to be in the next 18 months, but more importantly, where do I want to be in the next 5 years in terms of what activity I want to do with respect to what type of clients, counterparts, and what type of infrastructure do I want to rely upon. And so that is going to remain at the forefront as the UK, but also in the UAE, and also the US now having at least a bit more clarity as to where the level of travel is going to go on crypto assets generally, and perhaps a move away from enforce first and regulate afterwards. We'll probably look at, let's actually think about maybe regulating, but at the same time deregulating in the US. All of that makes it a very fluid space. I think every single jurisdiction that's serious about crypto is saying we need to at least get the concepts right of, are you regulated, are you not regulated, what the threshold conditions are, is it being authorized, and then more importantly, what are the disclosure obligations and the investor protection obligations that need to be afforded to those that are going through that. And then we come back to that point of terminology being somewhat different. And if you look at, for example, in a couple of jurisdictions that have a federal but more independent sub-federal structure, UAE being one of them, there are, of course, some differences between terminology between rule books. So a lot of the things that we do, and of course this will also be highlighted in our global crypto regulatory report, is to assess some of those differences between terminology. So that if you talk about an asset reference token in the European Union frame, what does that actually mean in the UK, in the UAE, in Singapore, in other jurisdictions, so that you have that almost multi-jurisdictional dictionary to understand how the term translates across. So again, hopefully, it'd be great if we were all to get to the point where we speak one language and a unified ledger and all of that stuff, but that's still a long way off. But we're sort of slowly moving there. So in terms of the sort of the key things that I think we're seeing with clients, but I'd love to also open up the conversation as well on this point, is these four buckets are really the biggest aspects that should be at the forefront of the mind. How sophisticated is the jurisdiction's regulator that I want to be able to deal with? Can I engage with them at the level of sophistication that I need to be able to run my business, or to run the services and new issuances that I would like to do? What is the international reputation of that jurisdiction? How easy is it for me to do business in and out of that jurisdiction, or to attract talent, but also capital into that jurisdiction where I would like to be based? And indeed, most serious players are thinking about a multi-jurisdictional approach, and not every single activity needs to always be done from the same point. More importantly, what's the operational cost? And obviously, that's everything from tax, but also reporting and sort of keeping the lights on of the business, but also ensuring that there's enough capital to grow the business going forward. And then more importantly, do I have access to the right talent to be able to do that moving forward? And of course, as we all know, in crypto, it's exceptionally mobile, it's exceptionally global. So being able to get that strategy right is really sort of the key difference. So I've talked for far too much. Apologies for that, but I just wanted to sort of do a whirlwind tour of some of the things that we're seeing, and then hand it over to you, Ellie, and see where we want to discuss about some of the misconceptions.
All right. No, thank you very much, Michael. That was very informative. I know it was not too long, but if you were to be too long regulation, you can speak for days here, because even the convergence between just the people really, I want to say, like, people don't really understand the difference just between one country and the other one. Like, everybody's like always thinking like cryptocurrency, yeah, it's all the same, and then every region is specifically, then it comes from a different type of background law. It's not the same. Roman to case law or whatever, so it's very complex to navigate. So thank you very much for being so informative. So I'm going to give now the floor to Alessandra to explain how a little bit what is the weekend's role with the sandbox to try to link it with you so we can amplify a little bit the scope as to how Europe is tackling MICA and then link it to your know-how with the MENA region, which is exploding. Every day we read news of something new and amazing happening in such region, while we believe that in Europe everything is blocked. But is it really being blocked or is just being enabled at a slower rate? That's something that we have to really navigate through.
Yes, and something that I really like a lot about your presentation, Michael, and it's something that we have encountered in our discussions, with the sandbox and other, and also with other regulators, is what you were explaining, about the asset and the fungibility, non-fungibility, and also depending on the country and the applicability of the national law, but also in general terms, and how that sometimes is confusing and you have to be very thorough to understand it, no? And you were explaining the German theory or doctrine that was really interesting, no? If it works like a security, actually like a security is a security, but it's true that sometimes, no, national laws can have their specifications, no? And also about that, I have a question, not about Micah and etc., but about Dora, because also related to the explanation you were giving about the costs, no? That it could be very costly for the companies, no? At the end, the clients are the ones that have to comply with everything that you explained. And I was the other day in a conversation regarding Dora, and I don't know if this is a misconception, okay? And also, I want to know the misconceptions that you have encountered about me, Micah, but also about Dora, because I don't know if it's true, but it's true that the regulator is going to come to inform the Dora uh, companies that have to comply with it, or this is a misconception.
No, sadly, the two things. So both DORA and MiCA are extraterritorial, which means if you are based outside of the European Union, but you are active in the European Union or engaging with someone in the European Union, then you have to either directly comply or you have to help your European counterparty comply with the obligations. That's something which should be quite clear. DORA specifically does have extraterritorial reach, so that someone, a US tech firm that is providing cloud computing services to a DORA relevant financial services entity and crypto asset entity in the European Union is itself a potentially third-party critical ICT provider and falls under DORA. Now, does that mean that the supervisor is going to hop on the plane and come over and bust open the door with the SWAT team in Silicon Valley? Not necessarily, but there are, of course, memorandums of understanding between European authorities and many authorities around the world, and in particular also in the United States, to facilitate that supervisory cooperation and, more importantly, enforcement if it does go down to it. Now, there are plenty of other means to, of course, compel DORA compliance. There's obviously, anyone who's a third-party critical infrastructure provider, including probably a lot of the computers that we're currently working on fall under that scope. They have presence in the European Union, so of course, you would have that, and of course, fines are global and sometimes travel a little bit faster than supervisors and local enforcement. So there is that scope on it, and there is, I think, also a conception and perhaps a misconception that the 17th of January 2025 is not a hard deadline. It is a hard deadline if you are not enthusiastic about your DORA compliance. So if you are well behind the curve, that you have a problem, and we should talk. But if you are showing obviously a move and a goodwill to comply, then things are somewhat easier, right? DORA is far more complicated than I think a lot of people in the market have previously anticipated. But you are seeing, of course, the UK has its own third-party critical resilience framework that has come out, an operational resilience framework that's come out. The United States doesn't have it yet at federal level, but there's New York DFS Rule 500, which applies, and indeed is also relevant to a number of crypto asset service providers in the US. A number of other jurisdictions around the world have been putting in that type of stuff. And I think, ever since one of the most recent biggest outages that I think everyone will remember is the CrowdStrike blue screen of death outage, which probably one of the questions I got on the day was, could Dora have prevented this? Well, probably not, but it would have at least managed to spot the issue earlier, potentially, and would have been able to rectify some of the liability issues. So, I think one of the things that we need to also bear in mind is regardless of size and complexity of business models of crypto asset service providers, it does make sense to take a step back from, a lot of the daily pressures and take a strategic view on some of these things. And to your point, Ellie, that you were mentioning about, the legal, the real commercial law, property law aspects when it comes to tokens and real world assets, and what happens when things are converted from a real world asset into an NFT or into a utility token. A lot of those aspects are not yet fully finalized, and I'm not going to do the shameless plug for us lawyers, but go speak to a lawyer, get an opinion, because that's actually something that will allow you to then demonstrate when it comes to a question from a regulator or from a counterparty or user, whatever. Okay, I've taken the advice, and the advice is the best advice I could have gotten at the time. But a lot of firms that have run into difficulties have tried to shortcut for a number of reasons, rightly or wrongly, but have actually found out that it's probably more expensive, when things go wrong, in not shortcutting it. And that also applies to Dora as well, right? So, apologies, it's a bit of a long answer to your question, but
No, it was super interesting because I had this doubt and I was like, I would like to ask Michael that he will know. And also the misconceptions that you already explained and a little bit about the asset that you were also talking now. Do you have any situation that you have encountered with a client about a misconception about Micah in this case, or maybe Edwin also if he has wants to add something else?
yeah, I think look, one of the considerable issues that you have is, how do I actually create a security interest over a wallet? And what can I do in terms of actually blocking when it comes to certain, in particular when we start to look at some of the things that we've been seeing on SAFTs and safes and how they, how you move from a fundraising concept to actual launch, and so the real aspect of security interests, and what do I have, if I can create a valid security interest under whatever type I can. Let's just call it a pledge, which means different things in different legal systems, but at the end of the day, a possessory security interest, which of course in most jurisdictions all kind of mean the same thing with slight differences. That's something which certain jurisdictions have been better at doing. So the UK has actually, at least for English law, the UK of course being comprised of three distinct legal systems, apologies, 3.5 if you really look at it properly, but certainly distinct legal systems under English law, and of course English law being used so internationally. The move to create that concept that a crypto asset can be a distinct property asset is already a quantum leap in the right direction. To be able then to say, okay, I can have legal certainty when I create a security interest over that property. And that's very important if you start to look at traditional financial services firms who use a lot of derivatives, securities lending, various different master agreement frameworks, also under loans, that are all based under English law, which of course have then been transformed under civil law counterparts. So LMA, German law, Spanish law, French law, ISDA, Irish law, French law versions, although still English law that's primarily used. Once you have that certainty on the ability to enforce the security interest with legal title, it makes it a lot easier to do those transactions between traditional assets and digital assets. And that's where I certainly see a lot more activity happening with that legal certainty that comes from it, right? In the EU, we have 27 different legal systems at national law that have an EU overlay to a certain degree with laws and regulations that are jurisdiction agnostic, right? So EU law will still have to respect the property law of Spain and the differences that exist in Portugal and the differences that, closely connected schools of law that each have slight differences, but that, will be more remote from, let's say, Estonian law, right? Just as an extreme example, right? And that's something which, we always say, okay, we went from financial services regulation moving from too big to fail to fixing too big to fail and making it safe to fail. But there's now a lot of things that are too big to reform, but too important to neglect or too important to miss. And in crypto assets, you need to also think about how do I create that, or how do I apply traditional law to what's happening once you convert an asset from a real world asset or financial instrument into a tokenized version of it with different property rights, different security interest abilities, different ways of doing that. And that's something that's going to take time to expand. And, it can either come through various different ways. It can come from new legislation. It can come from cases, European Court of Justice, but also national law. And it can come actually from market and industry best practice is probably the faster way to do it, and probably also the fairer, more constructive way to do it. So we love to work with with firms such as yourselves, but others to really shape that new environment to ensure that this newest, relatively now no longer at the fringe of markets, but really very much closer to the center of markets, and something that really touches from institutional through to households, that's a safe and sustainable market, right? And you can only do that if you have best practices that are respected by industry, that are understood by regulators and legislators and policymakers, because after all, it's a journey, right? It's not a static market. It's not going to be a static set of rules, and I think that's important from a European perspective, and then at the same time learning from experiences in other markets as well, where those same types of conversations are happening.
All right, so I really find it fascinating how we can pivot from utility tokens to securities or both at the same time, right? I mean, it's very hard nowadays just to put one into a single class, and we're used to that classification as a regulation, right? That's why we're struggling so much as lawyers to comprehend the scope, because suddenly you have a utility token representing access to real estate, but then you put interest on top, and now it becomes a security, and it's just an absolute mess, and it's cross-border, which makes it even a more messier. But that's why we're here, right? To have fun as well, because this is how the new world is looking. It's more cohesive, and at the end, radical mutated. And basically, my question would be: now that you have experience, obviously, in different jurisdictions, what would you say? And maybe it's what is more regulatory advanced? Europe, the American. I'm not gonna put Europe, UK, just to just to put everything, because UK between other countries is a little bit different. We know. Let's put Europe as a continent, America, or MENA, Asia. What are you seeing more of regulation advance?
I'd have to say Europe.
Wow.
And I say that fully acknowledging my bias. but I would say Europe, partly because, as I said at the outset, I think the U.S. has done that done regulation by supervision and enforcement, and it still has left unanswered a number of questions as a matter of law and also as a matter of supervisory certainty. And I think what's important, if you look at it, the question, it's a great question, right? What's more advanced? Then, of course, you have to ask the question, what are the parameters that you consider to be advanced, right? So for me, that would be clearly understandable rules and certainty on how those rules are enforced and applied. And I think in Europe, we have that at the moment, right? Now, there are tons of unanswered questions. But at least we know where the goalposts are. And we know that the playing field, to use that wonderful term that the EU loves to use, the playing field is going to become more level. There are going to be certain players on that playing field in member states that are probably, more better at doing what they do. And that's okay, right? Because at least in Europe, the 27 member states and the respective national competent authorities and the European supervisory authorities, they are talking to one another, which is good if you're looking for regulatory consensus. But you also have to be aware that they're talking to one another if you don't abide by the rules. In the US, you still have a lot of, you have the state of Washington trying to do its own thing, trying to see, okay, how can we maybe make ourselves more attractive in comparison to the 49 other states, right? And then federal authorities that sometimes don't necessarily want to speak to one another, and it just becomes complicated, right? If you look at MENA, MENA is there is that same degree of competitiveness between the respective constituent jurisdictions in MENA. So that's not only the countries, but specifically in the UAE, where you have a federal structure, and then you have onshore on an emirate by emirate basis, but then also free zones, so offshore, and English law exclaves in ADGM and DIFC. But then you have onshore with VARA in Dubai only, and then you have the federal overlay with EXA and the central bank. They're all speaking to one another, but they're also needing to play catch up with what's happening with Europe. And indeed, I've been here for Abu Dhabi Finance Week. It's been very enlightening to see the level of coordination and the level of willingness to really push things forward. And then if you look at APAC, you have a lot of very, very, very exciting projects that are in APAC and a lot of exciting use cases. And in particular, going back to that fundamental of why tokenize, right? If you can touch it and you can tokenize it, and that's the one aspect of the coin, if you excuse the pun. But the other aspect is if it's tokenizable, it's then tradable, and the actual value of that tokenization process to the financialization of markets and of jurisdictions and markets, and the ability to actually potentially help uplift certain jurisdictions that have not necessarily been able to benefit as much from financialization where it makes sense. APAC is certainly very exciting. Where it's problematic is that the goalposts are not that defined. So you have Hong Kong and Singapore that are really at the forefront of things. You have Japan that's also up there. South Korea is up there. But then you have other jurisdictions that have a lot of potential and a lot of willingness, like Vietnam and so on. But they're slowly only now picking up, right? And so, yeah, I think unfortunately, or fortunately, depending on how you look at it, Europe is really ahead of the game. It just needs to ensure that, you know, it can continue to build where it makes sense to build, but also coordinate with other jurisdictions, that the move to crypto, which I think is much more than just, you know, exciting projects, is actually a fundamental shift in the way that so much that we take for granted in payment systems and financial markets, how they operate. This full move to, you know, on chain, right, and the benefits of it. You know, Europe needs to then also coordinate, and it needs to be able to say, we're open for business. We're not going to create Fortress Europe, but we're also going to help, you know, engage with other countries and jurisdictions. And we haven't even touched about, you know, we haven't touched Latin America, which is super exciting, as well as, you know, Africa, where, you know, they're pockets of talent and expertise, and really actually, if you look at it also from a, you know, some of the societal impacts and some projects that are coming out of those jurisdictions, you know, if they can match with where there's demand for great projects, then, you know, we're doing a good thing, right? But it needs to have that industry plus regulatory practical meeting of minds to build that, you know, fairer, more sustainable marketing ecosystem going forward. So that's maybe too philosophical, but, you know, you asked me a tough question, so I will throw it back at you.
I always say like great lawyers are great philosophers, but we gotta understand some things that people don't really put themselves into perspective. All right, so I'd like to throw a question to Elisenda because she comes from the automotive, so she did corporate, I believe, automotive and crypto. So that's kind of like a weird journey. So I would like to ask her what has been like the change from automotion, which is still technical and you have to regulate, I guess, liabilities and claims, now to cryptocurrencies, which is still a huge building block.
Yeah, well, thank you for the question, Edwin. It has been a journey. No, what I can say is that it's working inside the company at the end has similar requirements. Okay, at the end, an internal lawyer provides assistance to other departments and reviews contracts and draft contracts. And in the automotive sector, I used to work like in the software development, which means that at the end, similar things when you work in a company like Bricken that has specifications like license agreement, etc. It's very similar, but also it's really interesting because it's a very new market, and we can like state or dictate the following steps. For instance, in the automotive sector, we have very clear standards of companies that have been around for a long time, but in our sector we can be the ones to provide our knowledge and our understanding to the market. And I think that that's super interesting from my side. And of course, well, knowing other lawyers that have so many expertise and other members of the sector and learning from them. I think that is the main difference, but at the same is really similar in another topics.
Perfect. Thank you. All right, so we're almost at the end. For me, it's been an absolute pleasure listening. And obviously, Michael, your know-how it's quite impressive. It's been a pleasure listening to you. And Elisenda, obviously, as your general counsel in Brigham, I can only say you're our best lawyer ever. So no words there. That's I really like the coincidence of us working with Pricewaterhouse. We were part of the acceleration program out of the UK. A lot of great know-how was built there that has actually amplified our service scope and also understanding UK as a jurisdiction, which is of interest of us. There's a new sandbox. We love sandbox here. Most likely we'll be in the UK one. We did the Spanish, now we did the European, so there's a possibility of us entering the UK. So with that, Michael, I would love to collaborate deeper. It's obviously that we need to really, like, people who are in the industry really progress together, because there's a lot of unknowns, and every day there's a new evolution of something that was not previously known before. So by analogy, we're applying sometimes wrong concepts, and that has actually, for my belief, stopped the industry as how it should be now. No misconception as to if it's a new asset, is it a reward, is it a security? Just the silence from regulators is what actually allowed the industry to move in a very weird state. But luckily for us, now we're getting to that Mika in action, which I like. And I am also a regulated guy. So I love when clear guidelines are both for the good or the bad, at least you know what is the path. When you work in the gray line, that's where you thought you were doing good, but then you were like, oh no, I didn't know that. So with that, just I would like to request from both of you a closing statement and just establish how do you see, let's put in short term, the next 1 to 5 years from a regulatory point of view on cryptocurrencies in whatever region you want. It's an open question, but I'd like to understand how you see the future as 2025 to 2030, the end of the decade.
Well, if you want, Michael, I can start. I'm going to talk about Europe because it is more near, and as Edwin was explaining, we have been in the sandbox, and I believe several topics that Michael already explained super good are going to be more clarified. I think it's going to be more standardized, and also these kind of gray areas that Edwin was talking about are going to be more clear, and of course provide to the lawyers and the companies more security in this aspect. And I think it's basically, in one word, standardization.
I would tend to agree. I think the at the risk of ensuring that there's always a healthy debate on this, I think the known unknown is the Donald effect, and the hope and the reality of what Donald Trump is putting forward in deregulation does not mean that things potentially could get easier. I think what you will see is that you will have standardization in Europe, you will have standardization in the UK, you will have convergence or adaptability, the ability to ensure that the European plug fits into the UK socket and vice versa with an adapter. That's goes hand in hand with standardization. The US may find, and firms and interested parties in the US may find that their life could become even more difficult than it currently is. Because whilst the US may domestically have a number of benefits from initial benefits, you asked me for 1 to 5 years. So incoming administration will be, has a 4-year run. So, and I say that I disclosed at the beginning I'm half American, so I'll try to be diplomatic. The initial benefits of what may come with some of the deregulation, which I think will probably mean less enforcement and less contentious engagement, will not necessarily mean that you can access the globe, or that the globe can access the US as easily as has currently been the case. I think that should not be underestimated. We're moving into a world where trade wars and competitive advantage between regions and blocks are going to dominate 2025. And that's unfortunately the case because, 2024 was where everyone voted across the world, and, hot political tensions and, the regrettable cost of conflict that comes from it. That's now going to spill over into the real economy in ways that we haven't seen for some time, thankfully. And that actually means that, it's going to be a lot more competitive. And competition at this level, when you're looking for convergence and standardization, can actually be quite detrimental. So that means that firms should really take a step back again and say, I need to figure out what works best for me, for my immediate, my medium term, my longer term plans, and for the stakeholders and communities that I engage with, in order to be able to navigate it. And deregulation doesn't mean that there's going to be any less change, right? It actually means there's probably going to be more change. So I would hope that there will be consensus where there makes consensus, or where consensus makes sense, rather. And I would hope that, being the optimist that I am, that you will, despite all of the noise coming out of various different political motivated speakers, that the real sense of clarity, calmness, and putting financial market stability first, and also digital asset market stability first, will be one that prevails. Because if things blow up, it's no one benefits whatsoever, right? So that's sort of a view on it. I think from a non-legal market technical use case type thing, 2025 through to 2030 is going to be extremely exciting in terms of new products, new asset classes, new ways of doing business, all backed hopefully by the greater regulatory and legal certainty that we're certainly seeing across Europe, and global economies that are looking to ensure that connectivity with European counterparts. So yeah, future is bright as always, and change is a constant, and hopefully we'll move forward together. And on the sandbox, that's a whole different. I think you'll see Sandbox 2.0 in a couple of jurisdictions. Hopefully, it'll be better than Sandbox 1.0. But I know we're at time, and we could go on for hours about the Sandbox.
All right. So thank you very much for attending this webinar. Obviously, it's recorded. We're gonna shoot it on our socials, and very much illustrative and informative. So I can only wish you all a great night. And thank you very much, Michael, for accepting these great invites. All right. Goodbye.
Bye.
Thanks. Bye.